Thanks so much for tuning into India Market Close. It's a very interesting characteristic of the day today that there is a bit of, while the markets are flat, there is a bit of a lone ranger kind of a performer which is helping the markets do this. Though the likes of ITC are also bouncing back. But before I get to specifics, bring up the mid caps and the small caps as well, because it's not been a bad day for a day which was besieged by cues of slightly choppy world markets and higher oil prices. I think we've done very well. Mid caps up about 0.5%, small cap index up about 0.5%. This is actually turned out to be a much better outing than what most people would have hoped for. And this week is characterized by the kind of performance that one HDFC Bank has put up. Bring up the heat map and then bring up the point contribution. So look at the kind of gains that are happening in select stocks. The index is flat because the likes of HDFC Bank, the likes of Kotak Bank and the likes of ITC are the ones which are helping the markets do better. Else, there is a fair degree of red in the session today. There is weakness in Grasim, weakness in BPCL, and OMCs by and large are sulking. There is weakness in two-wheelers in the session today. Bajaj Auto has stayed low for better part of the morning today and continues to stay lower. Bajaj Finance has continued to stay lower after the customer addition numbers seemed a bit off. So that's the other piece. But the point I'm trying to make is if we just get the contributors list out here, and you will see that we are flat, or we kind of flat principally because of HDFC Bank and then to an extent ITC. That ICICI Bank has moved back into the green is only incidental. And before I hand it over to Hersh, just get the advanced decline ratio up on the screen as Hersh walks in to just show you how the day is shaped up. So a fair degree of red which crisscross and now the green, and that just shows the strength at the broader end of the spectrum.
Yes, absolutely, Niraj. You can clearly see that the broader markets are doing fairly well. Let me pull up some stocks counters which are doing well on the back of one being news, of course, and others just generally which are buzzing in trade. I want to first off try and pull up something within the finance basket. Aavas, Bajaj Finance, both declared numbers and both have gone different ways. Bajaj Finance's numbers not bad, but couple of blips in with regard to the new loans booked, possibly keeping the stock in check. Also, mind you, the stock has been up nearly 15% over the last month till close yesterday. So some possible bit of profit booking, maybe that's the other possibility. The other one, Marico, doing very, very well in trade, 3.5% higher in a tough environment, posting a decent set, a growth, and looking at double-digit margin or rather EBITDA growth as well. Not bad in terms of those numbers. Some of the other stocks which are at play, something like an Amber Enterprises signs a JV agreement, absolutely flat now, but was up around 1% or thereabouts. Puravankara, again, very strong set of numbers, has been up all through the day. Let's see where that one is at, 6% higher even now. Let's pull up again some finance stocks. IIFL Finance is doing fairly well in trade today. Look at that, 13% up now, IIFL Finance. And you have SBI Cards as well, up about 5% odd. Not sure what is on with IIFL Finance, but it's on a tear at least at the moment. Let's also pull up some gas stocks doing fairly well in trade today, IGL, MGL. You also have something like a Rashi Peripherals, order win of 1500 crore, market cap of 2,500 odd crore. So clearly up and away, that one, newly listed company. Zomato, SJVN, IRB, all of those are also up and away in trade. Zomato has been pretty much a one-way performer. We've seen it go from 40 to 200 now. It's been quite a performer for someone who's bought it at those lows. Max Health, Intellect, Angel One, second consecutive day of losses after the numbers that they disclosed yesterday morning. I also want to try and pull up a couple of Tata stocks. Tata Chemicals, Tata Investments was doing fairly well in trade today. I think maybe, Tata Investments down 2.6, but Tata Chem still continues to be 3.5% higher. Niraj, back to you.
Well, there is some strength in banks for the week as well. If you just look at the weekly performance of HDFC Bank before I go to Vijay Chopra, and that's what I want to start off talking about with. Nifty Bank for the day has done well, for the week too has not done too badly, and that is courtesy what's happening to HDFC Bank. I think that is the key thing. Weekly performance 3%. HDFC Bank weekly chart, before I go to Vijay Chopra, 7% higher and been the star performer really. He's MD&CEO Enoch Ventures, joins us right now on the show. Vijay, good having you. Thanks so much for taking the time out and speaking to us. The monthly numbers from the banks, or the quarterly updates from the banks have looked, or financials have looked reasonably strong for the most part. Is what driving this kind of performance, and can it continue?
Well, most of the growth we have seen, let me talk about the private sector banks first. So HDFC coming first. And I think that even on your show, I have mentioned that shift to large caps, shift to HDFC Bank, which has not moved much and has actually fallen down in the last few months. And there's a lot of pessimism around HDFC Bank. So whenever there is a huge amount of pessimism around a good quality stock, I think it's time to latch on to it. So HDFC, even Kotak right now, it hasn't moved much. I would recommend that, people can start nibbling into a bank like Kotak. So it's a great bank. I think that certain public sector banks like Bank of Baroda looks very good. Bank India, Bank of India, Indian Bank, UCO Bank, IDBI Bank. These are great banks to have in a portfolio, and you can latch on to. The performance has been constantly on the up move. The overhang of bad loans and a bad asset quality is gone past, I think, in the last 3-4 years. So most of the banks are doing very well. Their NIMs are improving. Their deposits are definitely going up because, the FD rates are pretty high. So people are locking more and more money into their FDs. So I think that, the banking sector overall for 24-25 seemingly looks very good. And I think that, be with the large cap banks, they can do really well. Even, the likes of IndusInd, SBI in a correction, yes, one should buy in a correction. But yes, the smaller banks, smaller public sector banks and large private sector banks look good.
Okay. Ruchit Jain, lead analyst at 5paisa.com, joins us on the show. Ruchit, it's been a while. Thanks for taking the time out. How do you gauge the strength in financials? Because today too, ITC is there, but otherwise for the week, it's been financials which have led the rally. Can that continue next week?
Yeah, hi, very good afternoon, Niraj. Niraj, if we look at the recent corrective phase which just went by, where Nifty corrected by about 800 points, and even mid-cap and the small caps had a very sharp correction. Now, if you compare that correction of Bank Nifty vis-a-vis the other sectors, then I think Bank Nifty has relatively managed to do well during that corrective times. And it has formed that high top, high bottom structure. And now last 2 trading sessions also, if we see, yesterday, markets witnessed a bit of volatility on the Nifty front, but relatively it was doing well. Bank Nifty was doing well. And even today's trading session, we can clearly see that relative strength. And this time, I think the private sector banks have been showing some positive signs. You look at HDFC Bank, breakout from a consolidation of about 2.5 to 3 months sideways movement. Even Kotak Bank has started picking up momentum. ICICI Bank is trading around its support. So I think the downside seems to be very limited for this banking space, at least for the short term. And that high top, high bottom structure which I was talking about, that should lead to Bank Nifty towards new all-time high, which is I think around 48,650 was the previous high. So from a trading perspective, the trend still remains quite intact. We are expecting new highs to be crossed quite soon, maybe early next week itself.
Okay, Ruchit, while I'm on financials, and while we are on financials rather, Vijay, if I can ask you your views with regard to Bajaj Finance, because it's puzzling. 34% growth, 6.5% sequential on an AUM which has ballooned, so on a very high base, if I can call it. What are investors thinking? 1.5% lower in trade today?
No need to react on 1.5%. This is the call. And, if you have a company like Bajaj, which is one of the behemoths and one of the biggest in the NBFC space, I think that, one should not worry at all. These stocks are, great stocks and should be bought into a correction. And I actually recommended it in some of the channels around, say, 64, 6,500. It is now at 7180 odd. I think that it has a potential to go up to 8,000. So no worry at all. So just keep on hanging around. These companies, if somebody is a long-term investor, keep on hanging to the stock. This might go to 10,000. And for yes traders, I think that there is a lot of steam left. This stock should cross 8,000.
Clearly bullish on that one, Vijay. and it seems you're quite bullish with regard to the larger lenders, if I can call that. Ruchit, your views specifically on Bajaj Finance, if at all, on charts, and your top picks as well.
Yeah, so if we look at both the stocks, Bajaj Finance as well as Bajaj Finance, they made their previous all-time high somewhere in the month of September or October 2021. And since 2021, markets or NBFC space has done quite well. But still, both these stocks, Bajaj Finance as well as Bajaj Finance, have been consolidating in the range. Now, if you look at a bit longer-term time frame, then this entire move of last 2.5 years seems to be a consolidation phase or a time-wise corrective phase, which we can say. So we are not expecting any significant price-wise decline from current levels, but stocks are still within this consolidation phase. So I think in near term, we expect the sideways movement to continue. More attractive is Bajaj Finance. If you look at the chart structures, then in the entire falling trend line of this entire consolidation is coming around 1700, 1750. And the stock is quite close to that level. In case if we see a breakout above that 1700, 750 range in Bajaj Finance, then I think this stocks would be poised for a decent run-up. Usually both the stocks move in tandem with each other. But I think a relative outperformance, or if we get a breakout in Bajaj Finance over there, then short to medium term traders can look for buying opportunities are there. So at these levels, not expecting any significant downside in both Bajaj Finance Finance, but both are still in a consolidation phase, and we need to see a breakout before taking a fresh entry on the long side. Now, as far as fresh recommendations are concerned, Info Edge is one of our recommendations which we are recommending. If you look at the stock within the entire IT basket, a relative outperformance has been seen. In fact, very few of the IT names in this last corrective phase, if you see whether it's Info Edge, LTTS, or OFSS, these have been three names which have shown an outperformance in a corrective phase. So I think this is looking quite positive even from current levels. Price volume action is quite bullish over here. So one can go long on Info Edge with stock below 55.50, expecting target somewhere around 59.50 to 6,000 in the short term. And Century Textiles within the mid-cap space is looking quite attractive. Recently, we have seen at the start of this week itself, we witnessed a breakout from a consolidation that was supported by very good volumes. Last 3 days, it has been consolidating, but no volume-based selling has been seen. Minor corrections without any meaningful volumes compared to the volumes that we have seen during the breakout. So I think this is poised for a good move in the coming week. So take a time frame of about 1 week's perspective and go long on Century over here. Stop below 1600 for potential targets around 1800.
Okay, so those are some ideas. Now, one of the key gainers or the gaining sector for the day, you would argue, has to be real estate, up more than 1%, and specific stocks have come out with the Q4 business updates. Let's get in my colleague Anushi to talk about some of these. Anushi, good afternoon.
Right, good afternoon, Niraj. So we have 3 companies coming out with their Q4 updates. First on the list is Sobha Limited. Now, if you have to look at Sobha Limited's numbers over here, let's look at the pre-sales number. Over here, if you have to look at the pre-sales, that has comparatively remained in the 2% of a upside. Not much of a great quarter over here, while the realizations have moved about 13.5% on a year-on-year basis. But it is the QOQ numbers which are kind of disappointing. Over here, pre-sales have gone down about 23%, while the realizations has also slipped about 4 to 5% of a range. If you have to look at pre-sales also and see most of this 2.8% growth, even that is driven by the company's Bengaluru launch, which was announced in Q3. So that remains on Sobha. Again, sequential decline, which we saw was the lowest in the last 10 quarters. Sales volume also stood at about 1.3 million square feet, which is again about a 9% downside on a year-on-year basis. Now, again, if you have to look at the context of the overall FY24 update over here, the pre-sales that we are looking at, that has seen about a 27.8% growth. Again, this 27.8%, if you have to compare it with the company's management guidance that they had stated, that is about the 20% mark that they had given in the previous conference call. Again, on the average price realization, the 19% of an up move over here with about price realization of about 10,922 per square feet. Moving on, we have Macrotech Developers. Overall, in-line results for Macrotech, if you have to look at the pre-sales, about 4,230, which showcases about a 40% growth on the basis of its Q4 numbers, while the collections have gone about 20% of an uptick. While if you look at the company's FY24 results, a 20% of a growth over here, to about 14,520 and about a 6% growth in its collections. The company did guide for about a 20% of a guidance for its FY24, which it currently met in the year. Now, even more on this, if you have to look at the company's net debt also, the company has been, most of the realty players in fact have been on the focus to bring down their net debt numbers, which has reduced to about 3,000 crore compared to about 7,000 crore in FY23. So a significant downside over here if you have to look at that. And the GDV number, which is about the gross development value, initially the company had guided for about 17,500 crore, but the company has exceeded that with about 20,300 crore. Last on the list is Puravankara. Strong set of numbers over here. About 93% of a volume and pre-sales value growth, while the realizations has remained comparatively flat. This is due to the inventory mix that the company has between Purva land. So one aspect is that, again, coming to the FY24 numbers for the company, 84% of volume driven growth, while the value has seen about a 90% upside. Again, the company had in the last 3 quarters has posted some strong numbers and continues on this trajectory. So the focus now remains on the company's realization on how it would change its inventory mix going forward. So these are the 3 companies which are on the focus on the back of its Q4 numbers.
Thanks, Anushi. Thanks for that. And Puravankara is the stock that we will talk to, 7% higher. We take a quick break. We're back from a break and get in the management of Puravankara. Group CEO Abhishek Kapoor throws some light on the quarter and the year gone by. %93 uptick in volumes, 93% uptick in value, realizations being steady in the quarter. Puravankara may not have asked for too much more. Abhishek Kapoor, Group CEO, Puravankara, the man behind the execution, joins in to talk about the quarter and the year gone by. Abhishek, good having you. Thanks for joining in. This is not, I mean, this is unusually strong numbers. Is this pure demand, or is this also some bit of spillover happening from Q3? I'm trying to ascertain if this is a new normal of sorts for you, or did this take you by surprise as well, the 93% growth?
So thank you for having me on the show. But this is really not something which is a surprise for us. Clearly, there is a plan behind it. There is execution behind it. There is a thought behind it. We started our year with a plan. I think we have delivered very close to the plan, internal plan that we had. While the sales volume, I think the amount of inventory that we really opened up eventually exactly was similar to what we had planned, even though we didn't get sanctions as per plan. But overall, we are very happy with the numbers. And we start with a plan in the beginning of the year, like for this coming financial year as well. We have a plan in mind, and we did announce all the new launches, very close to those numbers in terms of opening of the inventory and selling. So pretty happy with it. Now we are on to the next year.
Right. So give us Hersh also joining in, Mr. Kapoor. Give us a visibility with regard to FY25. On this higher base, how would execution be? How would new launches shape up? And how would the numbers really shape up?
Look, so we were planning to open about 15 million square foot last year, in the sense launch 15 million square foot, of which we only got sanctions of about 10 million square foot. So we still have a spillover the 5 million square foot. Even in terms of opening of inventory and sales, we achieved the numbers that we had planned originally, which was around 9 million square foot of our area. So that 5 million will continue to give us some momentum. We obviously have a land bank of about 32 million square foot. So some inventory will come in from there. We've also signed up a redevelopment project in Bombay, and there is some pipeline which is on the acquisition side, which is currently under play. So we are hoping that those transactions will get concluded and something will get added over there. So, on an overall basis, we believe that we will tend to continue to push on the growth numbers. Yes.
Sure. And, with regard to realizations, I want to try and understand what's happening there. Clearly, with regard to demand, there is no concern, but realizations not creeping up. Is this specific? Is there a specific factor which is at play here? Which just want to try and break this down.
Oh, that's a very good question. So in Puravankara and Provident, we have seen clearly, actually across all three brands, we have seen clearly a price appreciation anywhere between 12% to 25%. Having said that, the mix of inventory changes because we launched a project very recently in Chennai, which was at about 3,000 rupees a square foot. And because of that realization and those volumes, the average, realization came down for the company. But if you look at each brand-wise and project-wise, the realizations only grown up. So I think the brand commands a premium in every market it's present in, and we see that trend continuing for sure.
Abhishek, so what happened? So two-part question. I don't know, maybe kind of Hersh referred to this, but on a higher base, at times it becomes difficult to grow at the same pace. I'm not asking for an exact number, but what I'm trying to ascertain is, one, would growth rates moderate a little bit despite the best laid plans as the quarters roll by, part one? And what happens to the cash flows generated? Do you reckon the demand is strong enough for you to deploy all of that money back into the business in order to keep on growing at a particular pace?
So look, there are two parts, and it's again a more deeper question that you're asking. So the cash flow that we are generating, like we collected in excess of about 1,000 crores in the last quarter, the cash flow we are generating is going towards two or three things, right? One is clearly it's going towards operations. The second, it's going towards repayments because these are self-generating kind of on the debt side, and the repayments are happening. And then the third is the surpluses are getting accumulated to make sure that we are able to redeploy. Now, we have sold about 7.35 million square foot in the last year. Our goal will be definitely to first ensure that if we have opened 10 million square foot, we replace 10 million square foot of inventory in the business. That is point number one. So clearly there is a focus on new acquisition, and that will require capital, internal accruals and external capital. Now, one of the things that we are clearly doing is we are rebalancing the portfolio and we are reallocating our capital from different geographies. For example, now there is a bit of reallocation happening towards the West because we believe that the West business will give us the push on the average realization, which is especially in case of Bombay, for example, with all the redevelopment work that we are trying to get there, we believe our average realizations will go up. So there is clearly a deployment plan for new acquisition which will come into play, and that's what happens with the cash. And of course, part of it will go towards repayment. Part of it is also going towards asset creation. So, for example, some of the debt goes into commercial asset creation, which currently we have about 2.8 million square foot currently under construction.
Sure. And these new launches as well as the projects in Bombay, average realization should be bumped up next year. So given the low base probably this year as well as the new projects coming in next year, can we see a mid-teens kind of increase with regard to realizations?
Look, realization in our case is a bit of a misnomer in the sense that if we go out there and launch another 3,500 rupee product in Purva land, but our ability to churn cash is much faster, our margins are good, then it's still, average realization may not look effectively going up at that rate, but it'll still look fairly healthy. I'd like to believe that it should get better next year. But having said that, if you decide to launch a couple of projects at a lower realization, still making a lot more money, then that should not matter for the market.
Okay. My last question, Abhishek. Based on the growth targets that you may have, I heard you mention that if you open with 10 million, you will close 10. I don't know if that's the official number. I don't know if you're in a position to lay out an official number right now or a guidance right now. But based on the number that you have, and if you have an official number, I would love to hear it. But based on the numbers that you have, would you need to do any kind of fundraising activity on the equity side to execute any of those plans?
Oh, definitely. External capital will be required. So there will be a bunch of, as I said, internal accrual. Some of the capital will be raised on the back of ongoing projects because that's the cheapest cost of capital available. Equity is more expensive, so we will evaluate equity as well at an appropriate point in time. But at the project level, at the business level, not at the group level or the entity level, we're definitely going to look at capital raise because we also, as I mentioned earlier, we are reallocating capital from different geographies. For example, we are sitting on a very large surplus in Kochi. We want to reallocate a bunch of it to the west, right? So therefore, there will be some amount of shifting happening. But for us, what's very important is that the business that we do, as long as the debt per square foot of area under development remains comfortable for us, which is somewhere sub 1,000 rupees a square foot, we'll be pretty happy with it. So I think keeping that in mind, we'll continue to do business and make sure that our top line pre-sales and operations go up, collections go up. At the same time, our debt per square foot remains at a similar level.
Point taken. Debt per square foot at a similar level. So can we expect debt, this base of debt to probably continue and you building on debt from here? So no debt reduction plans at a company level, at a console level. Just want to understand that.
You're absolutely right. I think as an absolute number, in fact, you might see marginal increase in debt. But on a per square foot basis, again, I'm going back to that per square foot because business is relative. As long as I have great cover, I have great cash flows, I think we should not be worried about that. So in that sense, on a per square foot basis, similar number. On an absolute basis, possibly go up. But on an overall basis, I think the performance of the business will far, outrun the debt number.
Okay. Thank you, Mr. Kapoor, for all of that perspective. Thanks for taking out time, having a conversation with us on this one. Stock up and away, of course, 6% high on the back of those very solid numbers. Let me take it across to Vijay. Vijay, we've spoken, hopefully you've heard that commentary coming in from Puravankara. With regard to Puravankara in particular, as well as other real estate plays, maybe something smaller, maybe a Suntech or a Sobha, which came out with numbers. Your views with regard to the space as a whole and any specific names that you're liking at this point?
Well, I think that real estate should start doing well once the interest cycle starts coming down. So we had a credit policy today, although it was unchanged. But yes, the cost of capital would come down considerably.
Okay, I think there is an audio issue there. Let me quickly just take it to charts. Ruchit, on charts, could you talk to us about Puravankara, how you're looking at it on charts at the moment, and the realty index in general, if you can quickly take us through that.
Broader trend for the realty space still looks quite positive. We are not seeing any kind of volume-based sell-off. Even in Puravankara, if you see the recent correction along with the mid-caps and the small-cap space which we saw, it retraced by about 38.2% of the previous up move and it has resumed its uptrend from there. And as I said, when this correction was there, we have not seen any kind of high volume-based selling in many of the mid-sized realty names. So I think the trend still remains intact. Any existing positions if investors are holding, then they should continue to ride this trend. So maybe around 260, 270, which was the previous swing highs, those levels should be expected in the short term.
Okay, thank you for that, Ruchit. We'll slip into a very short break. On the other side, we'll take you through FNOQs. We'll have Agam coming in on that one, and we'll take a closer look at Shashi Tharoor's portfolio today. So stay tuned. Welcome back. Thanks for staying tuned with us. We have Agam standing by to break down FNOQs. We are in the last half hour of trade this week, Agam.
Well, it's been a very quiet day of trade, Hersh, and despite the fact that we had the RBI monetary policy where, of course, we weren't expecting too much and we didn't really get a lot either, well, it was a very, very quiet day of trade for the benchmarks as a whole. And the Nifty continues to trade around the mark of 22,500. That's where we started. That's where we are ending the note days on, and very little change in open interest either. The Bank Nifty, again, the picture wasn't very different. We did start off with gains, and we are now looking at the index sustaining the 48,000 mark, currently at 48,400 and up by around 0.7%. A lot of that is on account thanks to the HDFC Bank and the kind of gains that we've seen there. And we have a 13% increase in open interest there. Moving on to your options market, as far as the Nifty is concerned, what are we bracing for as we move into the next week? Well, it's going to be a truncated one, mind you, and the expiry will be on Wednesday because Thursday is a holiday. And that's where we are seeing a little more traction once again around the 22,500 mark. This was perhaps an easy one to get. When it comes to your overall open interest distribution picture, as one might expect, once again, a lot of straddles being written. And by that, I mean calls as well as puts being written around the 22,500 strike. Let's move on, talk about stocks then, and see where things have moved. Well, we do have MGL, Gujarat Gas and Tata Chem looking at longs, Bandhan Bank and Bajaj Finance looking at shorts in terms of stocks which are seeing unwinding. We do have short covering for Hindustan Copper, City Union Bank and BEL, and AB Capital and Siemens looking at long unwinding coming through. All in all, a quiet will end to this trading week. That's what it looks like right now.
Quiet end to the trading week. Thanks for that, Agam. We hope it remains that way and no major moves in the next half an hour or so. Let me quickly take it across to Vijay. Vijay, want you to complete that point with regard to Puravankara and real estate, if you can close that.
Yeah, so what I was saying was that interest rate cycle has peaked out seemingly, and we're going to see a decline in the interest rates. So once that starts, so it would be good for the builders because they are under a lot of debt, so the cost of capital would go down, debt would be cheaper. Secondly, for the investors and the customers and the buyers, because the interest rates would be available at a cheaper rate. So that would propel the housing market. Now, I'll take you back a few years back where there was a lot of overhang of inventory with most of the builders. So this overhang is slowly and steadily going out. They have sold most of their inventory. And I think that, the bigger ones would be beneficiary. The ones which are on my radar would be, the likes of Godrej Properties, Oberoi Realty, Prestige, Sobha, the DLF for sure. These companies would keep on doing well. And I think that, in a correction, one should buy these companies. So I think, once the interest rate cycle starts coming down, it will be good for the investors, buyers, as well as the builders.
Okay. Ruchit, when I look at this week's performance, while banks, real estate, etc. have done well, the big gainer has been media, 6.5% uptick for that space this week. Have any of the stocks individually stood out for you from this bucket?
I think a lot of underperformance have been seen in this index since last 2 months. I think one should be very stock specific because there are no signs that this is just a resumption of the uptrend. I think this could be just a pullback move. But if I look at individual stocks within the media space, then I think Sun TV is one stock which is looking quite attractive. Just because the entire correction from levels of 730, 740, the stock has retraced its previous up move by about 50%, and we have a very strong moving average support on the weekly charts of Sun TV around the recent lows of 560, 570. So the downside here seems to be very limited. But again, as I said, the entire index, if I see all the other components, then it could be just a pullback move. So one needs to be very selective from stocks within this space, and the exposure to this sector, I think, should be quite limited.
Okay. Well, some NBFCs, of course, ruling the roost today. IIFL, by the way, is up 13% now. It's a really strong move that we're seeing in the stock today. And the last half an hour, 45 minutes, this stock has done very well for itself. Aavas, of course, Hersh spoke about in the morning as well. Good numbers backed move. So that's done okay. And infrastructure seems to be coming back. NBCC, NCC, there is IRB Infra, that bucket has done very well. Also, what's done well are selectively gas stocks. They are in focus. Several counters witnessing gains. Mika Johnson to talk about what could the potential reasons be for the boost in these stocks. Mika, good afternoon.
Good afternoon. So yes, we had the gas stocks, boost in trade, early afternoon with Indraprastha Gas gaining 7.3% intraday, Mahanagar Gas 5%, Gujarat State Petronet 4%, and Gujarat and GAIL in the range of 1 to 2%. Now, there's several factors. One is the peak electricity demand that is coming up in summer. Now, the IMD has projected higher than normal minimum and maximum temperatures for the upcoming summer, and this basically reflects into peak electricity demand, which the data has also been indicating. The government may issue something called the Section 11 under the Electricity Act to gas-based power plants. What it essentially does, it authorizes the government to mandate and direct these operating plants to operate at a higher level than they already are. Now, according to Citi, there's 25 gigawatts of gas-based power plants, and the average plant load factor is at 14% in the 10 months of FY24, which is slightly lower than the historicals. And Section 11 will help boost the gas demand. Potentially higher plant load factors will increase the incremental demand, and Citi expects 20 million metric standard cubic meters of gas per day to increase in the short term. There was also a Nomura note on gas companies as a Q4 preview, where it's maintained its neutral stance on GAIL, IGL and MGL, a buy on Gujarat State Petronet, which was also up in trade today, and a reduce in Gujarat Gas. Now, they expect the counters to benefit from the low input gas costs, with spot LNG prices dipping this quarter. There were also the price cuts to help on a volume uptick point of view. They expect GAIL's EBITDA and gas transmission volumes to rise 5 and 10% respectively on a quarter-on-quarter basis. For IGL, EBITDA to rise 10% quarter-on-quarter, and the price cut to also, it could impact the margins, but the lower LNG prices will offset that according to Nomura. And finally, for MGL, they'll benefit from their gas sourcing mix, which stands at an advantageous point versus its counters. And for Gujarat Gas, their EBITDA will increase 55% on a sequential basis.
Okay, thank you for breaking that down quite comprehensively, Mika. If I can go to Vijay, your views with regard to gas stocks in particular and within the power basket as a whole, given the way possibly the weather and climate may evolve over the next 3 to 4 months. Any opportunity that you are seeing, Vijay, structurally? Vijay, are you on mute? If you can just quickly check.
Yeah, sorry.
Yeah, okay, no worries. Yeah.
You mentioned two things. One, that I'm fairly bullish on power with the longer. And of course, you were talking about some gas stocks. So I think IGL, Gujarat Gas, NGL, all these companies seemingly are looking very good on the charts, and fundamentals are definitely intact. So I would say that gas is one part. Secondly, you're talking about power. So there is a huge potential in the power stocks. I'm talking about the next 10 years. If India has to grow and become a 5 trillion economy and more, so we would require power. With the new EV wave, we require power ever more, because more and more EV vehicles are getting sold, and they need to be charged as well. So I think the likes of Tata Power, the likes of PFC, REC, PTC, these companies should do well. NTPC should do very well over a period of time. Even I think that look what's happening to IREDA today. IREDA is almost 11-12%. So all these companies should do well, and to be bought in a correction. If at all you are seeing a unusual spike in the stock, don't just jump and buy. Wait for the stock to correct and cool down. So I think that power theme should be there and should be relevant for the next 10 years.
Okay, and you spoke of IREDA. IREDA in particular, I think trading at now pretty much its all-time high, if I understand correctly. But on valuations, you feel comfortable at this point, Vijay?
As I said, let the stock come down. Now, the renewable energy circuit has just, I would say, we are just scratching the surface. The government has mandated, that people should have solar power on their rooftops. and we are, increasing in our consumption as well as our production is increasing by the day. So what I'm talking about, IREDA, is the next 10 years, as I said. So I think that renewable energy and power are going to be the themes. And if at all India has to grow, India is a power-hungry country, and we need a lot of power.
Ruchit, with regard to charts, technicals, your views? Ruchit, I believe there's an audio issue there, but
no, I just it's interesting to see that one, what's happening within that pocket, Hersh. Two, when you just look at some of the metal counters, and especially the ones which have the base metal element to them, Hindustan Copper, for example.
Yes.
With copper prices doing what they're doing, I think Hind Copper, despite putting in some rally behind it, I think it's still in the green today, 2.5% higher, and the price volume action is not too bad either. So that's a set of stocks that kind of look interesting. Vijay, can I ask you, the China recovery has flattered many times in the past, flattered to deceive. Could this time be different? Would you bet on any of the metal names because of either the China factor or otherwise?
Well, China is just one part. Look at India, look at other parts. During the war, most of the production units were closed down in Europe. So, are you suggesting that it's going to be closed down forever? No, the production would start soon, or is starting, or in the early phases of starting. So, I think that metals should do well. Now, one more data I want to present here. The copper mines are getting dry by 2% per annum. This means that copper is going to become rarer over the period of next few years. And for if you want to see growth across the world, copper would be the major metal which is going to be used, and that's a parameter also of understanding that whether there is a actual industrial growth or not. So copper prices going up, consumption going up, definitely denotes something. So I think that Hind Copper in a correction, again I'm saying in a correction, Hindustan Zinc in a correction, the National Aluminium in a correction. Right now, I think NMDC is well placed. NMDC one can latch on to at these levels. So stocks like NMDC, GMDC look very good. Tata Steel, for that matter, in a correction. I think that Tata Steel can double up from here. So there are great stocks. Even Vedanta, the kind of news we are getting that they are wiping off their debt slowly and steadily. We can I'm giving a very big target for Vedanta. Probably we might see it at 600 rupees very soon if there is no debt overhang. So this company is a fantastic company into aluminium, into copper, into various kinds of metals. So I think Vedanta is a great company minus the debt. So if debt is taken care of, I think it can double up. So valuations can really skyrocket, and it's a wonderful dividend yielding stock as well. So lots of metal companies. There are some public sector companies as well, like Medhani, Mishra Dhatu Nigam, which I like a lot. The metal production it is used in defense. So Mishra Dhatu Nigam is another public sector company which I think can do very well in the coming years.
Okay, very, very bullish with regard to some of the counters. There's 600 on Vedanta. That's a solid one. Okay, so thanks for that, Vijay. Let me take it across, switch focus from metals to FMCG. Marico's come out with its Q4 numbers, just its Q4 update, rather, the pre-result update. Stock is up over 3%, 3.5% now, over 3.5%. Mahima is here to break down the numbers, what it means overall. Mahima, Street clearly excited.
Right, Hersh. So I'll just start with what the filing says. Well, the FMCG demand sentiment has remained consistent, is what they're saying, and there is some kind of converging that is looking in terms of both urban and rural demand. The domestic business has seen a slight uptick in volume because of stabilizing their portfolios across segments. Now, something that is working for them is Parachute coconut oil and Saffola oils, which has achieved mid-single-digit volume growth, and the food segment has maintained a steady growth and it is reaching about 4 times its scale in FY20 now, and food segment is growing mainly because of its digital first brands. Now in terms of what the guidance that management has given. They're saying that they expect gradual growth in core categories through their initiatives in the general trade, and they want to expand their reach in both urban and rural outlets. They're also planning aggressive diversification of portfolio through scaling up food and digital first brands. Their international business has returned to a double-digit constant currency growth, and the consolidated revenue has grown in low single digits. Now, overall, their margins have improved because copra prices have lowered down a bit, and edible oil and crude oil derivatives have remained stable. And the management has also guided that they anticipate low double-digit operating profit growth with a healthy expansion in operating margin. Their aspiration remains focused on sustainable and profitable volume-led growth, supported by brand strengthening and equity in new growth engines. So this is the overall view of what the business update Marico has come out with.
Well, clearly positive, and we're at a time when FMCG in general is under quite a bit of pressure. Vijay, how do you read into some of this commentary that's coming through from Marico?
Seemingly, I think that Marico and others, they were under the huge pressure of input costs. So input costs were not coming down. There was an uptick in the food prices and other things. But I think the performance which Marico has shown today and the commentary we've got from Marico, this is quite heartening. I think that the likes of Dabur, Hindustan Lever, ITC should do very well. I am particularly bullish on ITC. On another business channel, I've given a target of 800 within 2 years. So I think that I'm giving very large, huge targets today. ITC, I'm fairly bullish on. So there would be, there are a lot of businesses which would be demerged in future, and there's a lot of deep value. So they have also built their FMCG business beautifully. I think that, these stocks can be definitely added to portfolio, the likes of Hindustan Lever, ITC, Dabur. These are great companies. They are behemoths, and they are bellwethers, and they've seen the troughs and the crests of the market for decades. So I think that these are great companies to start accumulating in the portfolio, and definitely shun overvalue and look at value. I think there's deep value in all these companies.
Okay. Also, Ruchit, your view with regard to some of these FMCG counters, one and Marico in particular?
I think very selective counters have done well over the last few months from the FMCG space. Stocks such as Gopal has shown a good outperformance, where the trend still continues to be positive. Marico, if you see, then the stock has been in a consolidation phase since almost 2 years now. But the lower end of that entire consolidation is around 460, 480 range, and the stock is quite close to that lower end of this range. I think the risk-reward ratio is favorable for going fresh longs over here. But again, one should not expect any big gains. But if this stock even moves to the higher end of this range, then levels around 560, 550 could be expected. So around 10 to 12% of move from current levels. That's what the expectation should be. But overall, it's still in a consolidation phase. And as I said, from the entire FMCG basket, one should be very selective if one is looking from a trading perspective. As of now, the sector has shown a decent underperformance. But going ahead, let's see which stock witness good price volume action. Then one should place any aggressive bets over there.
Be selective, be cautious. Time of consolidation at the moment. But quickly switching focus, politicians and investments. We've tried to start to focus on that, Niraj, if I can term it that way. How diversified is their portfolio? We put spotlight on Shashi Tharoor's investments, from government bonds to mutual funds to even Bitcoin. We have Alex Matthew joining us to help us break down Tharoor's portfolio.
Well, the question that I asked was, what stands out in Shashi Tharoor's portfolio? And what stood out to me was the multifarious, multitudinous mutual fund schemes that he has. And I'm probably using lightweight Tharoorian words here, but then what that probably means or should mean to you is that there are way too many. Let's take a look at some of those, though. You have bank deposits of 10.08 crore rupees, and these are varied in multiple banks, including banks abroad. And then let's come to the mutual fund holdings, which is as many as 1.72 crore in 20 23 or 24 schemes, and 7 of those schemes are equity-linked savings schemes. And this is incredible for an individual that has total assets of over 50 crore, is still thinking about saving taxes. Some of the big holdings, however, are in the likes of HDFC Credit Risk Fund, Franklin India Focused Equity Fund, as well as ICICI Pru Multi-Cap Fund, the BAF Fund, the Balanced Advantage Fund from ICICI Pru, as well as HDFC Flexi Cap Fund. He's also got RBI bonds and certificates of deposit. By the way, those are short-term instruments, debt instruments, to the tune of 3.61 crore rupees. He's got a portfolio management scheme with JM Financial to the extent of 36.7 lakh rupees. He's also algo trading with an entity called ST Advisors to the tune of 1.23 crore rupees. And he's finally got gold worth 32 lakh rupees, US Treasury worth 2.02 crore rupees, overseas equity, which eclipses everything from domestic holdings, at 9.33 crore rupees. One would have to ask if he holds the FANG stocks, or in fact some of the other large entities there, including Nvidia. A Bitcoin ETF, which was mentioned earlier, to the extent of 5.11 lakh rupees, Bitcoin to the moon, Mr. Tharoor, and options that are currently open worth about 20 lakh rupees. So it seems like Mr. Tharoor's investment portfolio is almost as savvy as his vocabulary, apart from his mutual fund holdings.
Yes, indeed. This Homo sapiens, I'm trying to think of difficult English words. Maybe Alex or Hersh can help me, but that would have been a perfect ending. Sorry, I botched it up. But Alex, thanks so much for bringing that to us. From Rahul Gandhi to Shashi Tharoor. And whoever Alex finds next, or whoever's portfolio is found next, we'll try and get some next week as well. It's something that we'll try and do during this election season for sure. Okay, just before we wrap up the trade, let's take in some closing ideas. Usually Vijay has an interesting investment idea. Vijay, anything on your radar?
There are a few stocks which I would like to recommend. I think that LIC.
Vijay, we are very close to market close. So let's just stick to one.
Okay, so I think that the one stock I would like to recommend today is LIC. So LIC has fallen a lot, and I think that post the correction it has become really good, enticing. It is now the largest insuring company in the country. The Adani overhang is gone. The numbers more or less are in line. So I think that LIC is here for a long haul. I would recommend it for a target of 1200.
Okay, Vijay. Ruchit, your top BTST or buy this week, sell next week ideas?
Bajaj Property is looking quite interesting. For one of the real estate name which is on to its new record high again after the recent corrective phase. So volumes are also good. Price volume action is quite strong. One can go long over here with stop loss below 2470 and expect targets around 2580.
4.5% higher. Godrej Property is clearly doing very, very well in trade. Ruchit, what do you make of some of these NBFC names which are doing fairly well in trade today? Something like an IIFL. We are seeing 13% uptake in trade today. Something like an SBI Cards up 5% as well. What should one do at this point? Is it a good time to enter? Is there something unique happening with regard to charts?
So I'll keep my comments restricted to SBI Cards because IFL, since we belong to same group company, so I won't be able to comment on that. SBI Cards, I think the stock would see a sharp pullback move. Today we have a good price volume action after a long period of time. The momentum readings were quite oversold. In fact, being a weekly close today, even the weekly momentum readings are giving a positive crossover. So I think one can expect levels around 770 to 770 in the coming week. So if any existing long positions are there, one can hold on. Even fresh buying could be done, but from a very short-term perspective, potential targets around 770.
Okay, fine. And clearly bullish on that one, SBI Cards, 770 being the target price. Vijay, if I can come to you, funnily, SBI Cards up 5.5%. Quick take on that one, because it's not been the most clean journey for an investor in SBI Cards. It's been a difficult one.
Well, yes, the credit card business is definitely going to be challenged by the new ways of payments. And, I think that SBI card, although it is a larger player, but yes, we have seen, Citibank commercial banking winding down, selling its business to Axis Bank, the likes of AB and AMRO. Many companies have gone out of India. So credit card business, so to say, in India is a dangerous business because the default rate is very high. So I think that, this oversold zone, once I would be comfortable buying, HDFC, SBI card would be, around maybe 780, 790. If it crosses that level, I would be comfortable buying it. Otherwise, it might be one-off flash in the pan.
Okay. Gentlemen, we'll leave it at that. Thanks both of you for joining in and giving us your thoughts. Really appreciate your time. Have a great weekend. Let's start wrapping up the markets. A minute and 20 seconds left. And the intraday of the Nifty, we know that it's flat, but just want to mark the intraday to just see the gyrations, because we did have a bit of red today for most part, and therefore that we are ending close to the flat line is not bad, considering that the rest of the world didn't particularly have the greatest of days today. I mean, if you look at what US markets did overnight, what Asia did today as well, select markets, at least in Asia, I think we are okay. Bring up the heat map and let's just see if it changed. There was about 3 rows of red and yes, a bit more green, but kind of around those same lines. The Aditya Birla Group has had a bit of an issue today. Grasim and Ultratech are down. Larsen is down about 1.5%. There is weakness in two-wheelers. The likes of Bajaj Auto is certainly down in trade. The others which were down in trade on open have kind of recovered a little bit of lost ground. Hero MotoCorp in particular is in the green now. And what's done well? Kotak Bank, the best performer in addition to HDFC Bank. So two great movers, if you will. ITC was at a point of time the top of the list. It's still up about 1%, but not as strong as one would have thought. And now, just before Hersh takes over for the broader end of the spectrum, just one quick word on the market breadth, and that will come up on your screen. Well, we're ending nearly at the high point of the day, so not bad going, even as far as that goes. Hersh, what about the mid caps?
Well, yes, it's a strong day of trade for the mid caps. We've outperformed the benchmarks for sure, 0.5% higher for the Nifty mid cap, the small cap too trading higher, and that was very, very indicative in the advanced decline ratio as well. Tons of stocks in focus, but let me talk about some specific names which have been in focus today. Let's pull up something like an IIFL, see where it's settling in at close today. There you go, almost 13% higher. Let's also see some other financials, something like an Avas. JM Financial is up roughly 4% as well. Something like an Avas, nearly up 10% at close. So some of the financials seem to have done quite well. Within the mid-cap space, let's pull up something like a Supreme Industries. It's one of the top gainers on the Nifty mid-cap. It's done, again, very well in trade today. Let's also try and see where Americo is closing in at. Again, that update coming in. There you go, 3.5% higher. Some of the losers, Max Health, being one of them. Intellect, Angel One, there you go, 2%. Not too bad. Even among the top losers, you're not seeing, you're seeing maybe a 1 to 3% kind of a decline. So not bad at all. Angel One has given up some of those losses that it was sitting on. Some real estate counters, something like a Puravankara. Sobha had slightly softer set of numbers. Let's pull that one up as well. Where is it settling in at? Okay. So that's where we've closed where Sobha is concerned. Some gas stocks, IGL, MGL. Also, I want to try and pull up PB Fintech because that one has really hit it out of the park in the same time as Zomato has. It's been a little less covered than Zomato, than we've covered Zomato. Maybe deserves more merit, but that one is up 2% as well. Both of those, PB Fintech and Zomato.
Yeah, quite unlike what Paytm's trajectory has been, unfortunately. Yes. But with that, it's a wrap on this edition of India Market Close from Hersh, me, and the team that put this show together. Thanks so much for watching.